My first bold decision.
Adani Group
now lost a whopping $65 billion.
Hindenburg Research accusing the conglomerate of share price manipulation and fraud.
Using shell companies to pump up the stock of Adani Enterprise.
It was January 24th, 2023. The morning the markets would never forget. A single document, 106 pages long, was about to erase $150 billion of wealth and nearly topple Asia's richest man. 9,000 miles away, a small research firm pressed publish on what it called the largest con in corporate history. The words left Manhattan like a financial nuke aimed straight at Mumbai. Within minutes, brokers everywhere were refreshing their terminals. The report accused Gautam Adani, the man who built India's ports, power plants, and dreams, of stock manipulation, accounting fraud, and a labyrinth of offshore shell companies.
In January, US-based short seller Hindenburg Research said it held short positions in the group and accused the conglomerate of improper use of offshore tax havens. The short seller also flagged concerns about high debt. This led to the loss of $11 billion in investment.
Only weeks earlier, Adani had become the world's third richest man, a symbol of India's rise, the billionaire who promised to electrify a nation. His empire stretched from coal to solar, from cement to media. To many Indians, he was progress itself. By nightfall, markets trembled. Adani Enterprises, his flagship, fell 20% in a single session.
Adani Enterprises is down by 20%, lower circuit trading temporarily.
Adani Ports and Adani Total Gas followed. Investors dumped billions in panic. In days, the group would lose over $100 billion, an evaporation of wealth so fast that traders could hardly believe their screens. In less than a week, Gautam Adani's personal fortune collapsed from $120 billion to 75. The third richest man on earth had fallen out of the top 10. For the first time in his career, the billionaire was no longer in control of his own story. Credit Suisse and Citigroup refused Adani shares as collateral. Bond prices tumbled to 60 cents on the dollar. The markets were bleeding cash and credibility at once, and with every tick down, a decades-old dream seemed to crack. Just as the group prepared to raise $2.5 billion from the public, Adani stunned investors. He canceled the offering, despite full subscriptions.
There were moments when it seemed the mega 20,000 crore rupee FPO may be on shaky grounds, but the issue did pass the ultimate test.
He called it morally correct to return their money. It was a rare moment of surrender from a man who never blinked. India's streets erupted. Opposition leaders demanded answers. For years, they had warned of a Modani nexus, the cozy bond between Prime Minister Narendra Modi and his home state ally.
Congress MP Rahul Gandhi launched a sharp attack in Parliament on Prime Minister Narendra Modi, linking him to Adani Group chairman Gautam Adani. He alleged that several deals.
Now they had proof, or so they believed. The scandal was no longer financial, it was political. The Prime Minister said nothing. His finance minister assured the markets were sound, but Modi remained silent. That silence spoke volumes, a chasm between political power and public accountability.
A day after the Prime Minister brought up the Rafale deal on the election campaign in Karnataka, a sharp response from Congress leader Rahul Gandhi.
The world was watching and wondering if India's miracle growth had been built on illusion. The term India's Lehman moment trended on Wall Street. For a nation that had sold itself as the next superpower, this was humiliating. From his office in New York, Nathan Anderson watched billions evaporate half a world away. His profit was modest, perhaps 100 million, but his impact immeasurable. A small firm had shaken a nation and rewritten the rules of power. He had built India's most ambitious empire, and now it was on fire. In his silence, the world saw the cost of hubris. This was more than a financial crisis. It was a reckoning. The billionaire stood alone against a foreign accuser, his empire bleeding out. But in every downfall lies the seed of a counterattack, and Adani, ever the fighter, was not done yet. Long before the crash, before the billions in the headlines, there was only a boy from Gujarat and the sea, Gautam Adani, a college dropout with restless ambition, looked out over these same waters and saw opportunity where others saw emptiness. He began as a diamond sorter in Bombay's bustling markets. The trade taught him speed, precision, and patience, the art of buying low, selling high, and trusting instinct over luck. He was never satisfied with small margins. He wanted scale, the kind that could move a nation. In 1988, he founded Adani Exports, trading plastics, coal, and metals. It was a modest start, but in every deal, he learned to read the world like a map. Each container ship that left his dock carried not just cargo, but proof that ambition could be exported. In the early 1990s, India was changing. Economic reforms opened the doors to private enterprise, and Gujarat, Adani's home, was eager to modernize. When the state offered tenders for a private port, one man stepped forward. In 2001, another son of Gujarat rose to power, Narendra Modi. Their partnership would redefine India's industrial landscape. Adani provided infrastructure, Modi provided policy. Together, they turned Gujarat into a showcase of development, and critics whispered about a dangerous closeness. From 2005 onward, Adani's reach expanded like wildfire. Power generation, transmission, logistics, gas, and even media. Each acquisition fed the same hunger, control the arteries of India's economy. And it worked. He borrowed heavily, betting that growth would outrun debt. Banks and governments followed his lead. They saw not recklessness, but vision. Adani became the face of India's private sector, the man who could deliver the impossible, faster than bureaucracy could keep up. Between 2016 and 2022, Adani Group's market value multiplied more than 1,000%. Investors poured in. Analysts called it genius. But beneath the rise, there was imbalance. Too much debt, too little scrutiny. Growth without gravity. By 2022, Adani's empire spanned continents, from coal mines in Queensland to ports in Colombo and Haifa. His net worth soared past $120 billion, overtaking tech moguls and industrial giants alike. For a moment, he was untouchable, but in the glass towers of Wall Street, whispers began to spread. Why were Adani's valuations so high? Who owned the offshore funds propping up his stocks? And why did no one seem willing to ask? On the last night of 2022, Adani celebrated another record year. He had conquered energy, infrastructure, and influence. But across the ocean, in a quiet office in Manhattan, a team of analysts was finishing a report that would change everything. On January 24th, 2023, the world's third richest man would wake to find his empire under attack from a firm he'd never heard of. And by the time the markets opened, the countdown to collapse had already begun. After 2 years of silent investigation, a handful of analysts in New York were ready to pull the trigger. They had followed paper trails through Mauritius, Singapore, and the Cayman Islands, tracing billions that seemed to disappear and reappear in circles. On the morning of January 24th, 2023, they pressed one button that would set the world on fire. Hindenburg Research accused Adani Group of orchestrating decades of fraud, a system of shell companies, inflated accounting, and stock manipulation hidden behind the veil of national progress. They called it, quote, the largest con in corporate history. Within minutes, the fallout hit. Shares of Adani Enterprises plummeted. Adani Ports and Adani Total Gas followed like dominoes. By the end of the week, over $100 billion in market value had vanished, the single fastest wealth collapse in India's modern history. For months, Gautam Adani had been the world's third richest man, a symbol of India's unstoppable rise. Now, in less than 10 days, his fortune had been cut in half. His image as a self-made visionary gave way to a new one, that of a man standing on quicksand. In an attempt to restore confidence, Adani launched a $2.5 billion public offering. It was meant to prove that the empire was stable, but as the panic deepened, he shocked the world, canceling the offering and returning the funds. He called it morally correct. To the markets, it sounded like surrender. Foreign lenders panicked. Credit Suisse and Citigroup stopped accepting Adani securities as collateral. Bonds fell to 60 cents on the dollar. What began as a research report was now a global firestorm, one that threatened to burn through India's credibility on the world stage. In India, the scandal became political dynamite. Opposition parties seized the moment, accusing the government of protecting its favorite billionaire. Parliament descended into chaos, sessions halted by protest. The public demanded one question be answered. How could this happen under the Prime Minister's watch? The finance minister told the nation the system was stable. But Modi, once photographed alongside Adani at ribbon-cutting ceremonies, stayed silent. His quiet fueled the suspicion that the empire had grown too close to power to fail. The global press erupted. For a world that saw India as the next economic miracle, the Adani scandal was a reality check. If one of its largest conglomerates could crumble overnight, what else was hidden beneath the surface? From his Manhattan office, Nathan Anderson watched the carnage unfold. His firm would earn an estimated $100 million in profit, a fraction of the $100 billion in losses it triggered. To him, it wasn't about money. It was about pulling back the curtain on unchecked power. The Adani Group struck back. They framed the report as a calculated attack on India's growth story. The message was clear. Criticizing Adani was unpatriotic, and in a nation proud of its rise, that argument resonated. Behind closed doors, Adani's team worked around the clock, prepaying loans, calming lenders, staging damage control. But the empire's greatest weapon would not be finance. It would be narrative. Adani had always known that in business, perception is half the battle. Hindenburg fired back with a single line that would echo through boardrooms across the globe. Fraud cannot be obfuscated by nationalism. The war was no longer about numbers. It was about truth. The nation split in two. For some, Adani was a patriot under siege. For others, he was the embodiment of crony capitalism. Yet amid the noise, one fact remained unchanged. Billions were gone, and faith had been shaken. He had built his empire brick by brick, and now he watched it crumble in silence. But the storm that threatened to end him would soon reveal another side. Not the builder, but the survivor. 5 days after the world turned against him, Gautam Adani prepared his counterattack. The empire had been struck but not destroyed. And in that boardroom, under the hum of storm clouds, a new narrative was being written, one that would blend defiance, patriotism, and survival. On January 29, 2023, Adani released a rebuttal, 413 pages long, an avalanche of denials aimed squarely at Hindenburg. It accused the firm of spreading lies, manipulating markets, and above all, insulting India itself. The message was unmistakable. This wasn't just a corporate war. It was a battle for the nation's pride. Television studios turned the crisis into theater. Some called Hindenburg economic terrorists. Others painted Adani as a victim of Western greed. Overnight, the story stopped being about fraud and became about identity. Behind the patriotic rhetoric, the group scrambled to stabilize its finances. Loans were prepaid, collateral was restructured, and every creditor was reassured that the empire could still stand. The public saw confidence. The truth was damage control. In private, he remained composed. To his team, he was calm, silent, immovable. To the world, his quiet became mystery. But silence can be strategy. The less he spoke, the more others filled the silence for him. In February, Adani's team launched a global roadshow. Investors were invited to see the numbers, hear the reassurances, and believe that the worst was over. In each city, they spoke of assets, cash flow, and stability. But what they were really selling was faith. And then a lifeline arrived. On March 2nd, a Wall Street fund, GQG Partners, placed a $2 billion bet on Adani. Its founder, Rajiv Jain, called the report exaggerated and the companies undervalued. Against the tide of panic one man had chosen to believe, the effect was electric. Adani's shares surged 35% in 3 days. Employees celebrated. Investors breathed again. The empire, though wounded, had found its pulse. The GQG investment was more than cash. It was symbolism. It told the world that the Adani brand still had believers. But trust rebuilt through money alone is fragile, and beneath the surface, investigations had already begun. India's highest court ordered its market regulator, SEBI, to investigate Hindenburg's claims. For the first time, Adani's empire would be dissected under judicial supervision. The stakes were no longer corporate. They were constitutional. Investigators began tracing the web of offshore entities tied to Adani's brother, Vinod Adani. What they found was a maze. Companies within companies, ownership hidden behind layers of secrecy. SEBI called it a journey without a destination. The deeper they went, the darker it became. Months later, the expert panel reported that it found no definitive proof of market manipulation. Not yet. Adani seized the moment. He tweeted 2 words that would define his comeback: Satyameva Jayate, truth alone triumphs. But the truth, as always, was complicated. With the ruling came relief. Bonds stabilized, credit ratings improved, and Adani's companies resumed operations. But victory had a hollow echo. Investors were cautious, regulators suspicious, and the world no longer looked at the name Adani the same way. Even as ships docked and cranes swung, the air had changed. Every success now carried a whisper. What if the next revelation was worse? In business, perception is profit, and Adani's had been permanently altered. He had fought back and survived, but survival is not redemption. As the waves crashed against the shore, one question lingered. Could the empire that nearly fell ever be trusted again? By February of 2023, the battle that began with a report had become an inquisition. What started as a financial scandal had turned into a test of India's institutions. Could they hold the powerful accountable, even when the powerful built their cities? Investigators followed the trail of money across oceans through Mauritius, Singapore, the Caymans, and Dubai, chasing ghosts in the balance sheets. Each company led to another, each signature to another shell. Vinod Adani's name surfaced again and again, then vanished behind the next offshore curtain. The court formed a special panel, former judges, senior bankers, economists, to determine whether the watchdogs had failed. For weeks, the nation waited as hearings blurred the lines between corporate intrigue and courtroom drama. When the panel finally spoke, it found no definitive proof of market manipulation, but no proof of innocence either. The evidence was buried too deep, the trail too old. The regulators, they said, had followed procedure, yet somehow missed the truth. Adani declared victory. Critics called it survival by ambiguity. The markets called it enough. Within days, Adani Group stocks surged again. Bonds recovered. Credit agencies softened their warnings. It seemed the empire had weathered the storm. But beneath the rebound lay a subtle shift. Ambition had been replaced by caution. Projects once paused began again. The ports still welcomed ships. The power plants still burned coal and dreams alike. But inside boardrooms, risk-taking gave way to restraint. For a man who had built a spire on audacity, restraint was a new language. The aftermath rewired India's markets. SEBI tightened disclosure laws, forcing transparency from shadow investors. The phrase beneficial ownership became a household term. Even the giants learned that opacity had an expiration date. To global investors, the Adani saga became a cautionary tale. The message was clear. Unchecked growth is only freedom until it isn't. The same ambition that lifts nations can, without scrutiny, swallow them whole. Late in 2024, another blow came. The U.S. Department of Justice indicted Gautam Adani and senior officials for alleged bribery tied to foreign contracts. For the first time, the empire's troubles crossed India's borders and into the realm of international law. The scandals spilled into politics once more. Opposition parties framed it as proof of crony capitalism. The ruling party called it foreign interference. Adani's name became a synonym for both progress and peril, depending on who was speaking. Years later, at Mundra Port, Gautam Adani stands at the same spot where his dream began. The wind smells of salt and steel. Around him, the machines hum on, obedient, endless, alive. He built this, and he nearly lost it all. The Hindenburg saga wasn't just a story about greed or politics. It was about vulnerability, how power, once unchecked, invites its own reckoning. It showed that even the mightiest empire can stumble when truth demands its due. By 2025, the Adani Group stands smaller, slower but steadier. The empire endures, not untouched but transformed. The billionaire who once defied gravity has learned to live with it. Every empire believes it will last forever. Yet history writes a different story. That power is only borrowed, never owned. Gautam Adani learned this truth in the hardest way, by almost losing everything. Empires are not destroyed by truth. They are remade by it. And in the ruins of arrogance, there is always room for something new, a humbler kind of greatness. Every nation has its titans, men who build faster than rules can catch them, whose ambition becomes a mirror of their country's hunger. For India, that man was Gautam Adani. His story is not just one of rise and fall, but of how power and faith intertwine, how a nation's dreams can lift a single man to the heavens, and how gravity, patient and merciless, always brings him back down. In a world that worships growth, the Adani saga asks an uncomfortable question. What happens when success moves faster than accountability? When progress stops being a promise and becomes a performance? We cheer for those who dare, but rarely ask what they owe in return for our admiration. One report, written half a world away, showed that truth no longer belongs to the powerful. In an age of data and transparency, anyone can be the whistle in the storm. Hindenburg reminded the world that even empires must now live under the light. And so, the sea that once promised fortune still waits, silent and unchanged. The empire survives, scarred but standing. Its founder walks its shores, knowing that greatness and guilt often share the same foundation. Maybe that's what this story was always about. Not wealth or corruption, but the fragility of certainty. Empires fall not when they lose money, but when they lose belief. And yet, as long as there are those who dare to build, and others brave enough to question them, the balance will hold. Because in the end, truth is not the enemy of progress. It is its compass. Empires rise, empires fall, but truth endures. Satyamava Jayate. Truth alone triumphs.